Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Millennial Mike, and newest expert. We can call him an expert series. We're going to try to talk every week. He has a very busy and a chaotic schedule, but I'm sure we will find time to make it work. And we're starting a new series where Mr. Millennial Mike goes through our comments and pulls out questions he thinks we should go deeper on, and also some hater question, which I greatly appreciate. Again, I don't know what these are. So yeah, this should be fun. Let's see what happens.
Well, Mike, thanks for having me on. And yes, so in this segment, what I do is I meticulously comb through all of Zuber's One Rental at a Time YouTube videos, and I look for the spiciest comments and the spiciest questions that there are, or potentially even just good questions, because there are actually a lot of great questions. So in this video, we're going to talk about some rising interest rates, some seller finance questions. But what I wanted to start with first is one of the haters, somebody who's been watching a little too much reventure capitalist. I can't think of the name, but this guy who says nothing but crash, crash, crash. And the YouTube user capital M space capital M said, I guess that channel was right. Can you guys do an apology video? What do you think, Mike?
So I guess I have a couple of things. I see these comments, and I'm glad we're addressing this. I'd love to address this one time and move on, because I get about a dozen of these a week in different flavors. He was right, you were wrong, right? So I actually was on his page earlier today because I wanted to see what's going on. So we'll look at that in a minute. So I actually have a couple of thoughts. First and foremost, if I am wrong, I will clearly acknowledge it. If I owe someone an apology, I'm a big boy and will gladly do it. But B, I'm not going to do it early, and I'm not going to do it when they're still wrong, right? So badgering me, telling me somebody's right when they're not, is not really a smart idea. Second, I do actually, I will admit to being jealous. I'm jealous of Reventure Consulting. He has the ability. He's very good at telling stories, right? I believe a lot of communication, a lot of YouTube is entertainment. And he has found a story that works. The fact that most of his videos have 100,000 views and, I'm lucky to have 4,000 clearly means he is very good at what he does. So I will admit to being jealous. I love the fact that his message resonates and people watch it is good for him. He's doing what the YouTube algorithm wants. That said, I'm not that guy. Right. I did a video earlier that I've spent over $125,000 on my channel, and I'm not making that on this channel, trying to grow my legacy. Right. I'm playing a different game. I'm trying to help people get richer, build wealth. We're playing fundamentally different games. If you have been listening to that channel for the last 2 years, you've lost out on the cheapest rates probably of your lifetime. You've lost out on 20, 30, 40%. Anybody who says, and he did, that 2020 was the worst market to buy real estate, or a crash was happening in 2020, doesn't understand math. He made the claim that 4.3 million people in forbearance would lead to a foreclosure wave. I said that was wrong. We've now seen 3.9% of those cure, with less than 1% going to distressed sale. So I was right. He was wrong. But let me bring up his page, because I would love to know which of these wonderful things he would. So again, here's his page. Biggest crash ever? No. 40% crash? No. Worse than 2008? No. 50% off? No. 30% discount this summer? No. This guy doesn't understand how this really works, and he is not right. And we won't see 30% crash. Real estate doesn't move that fast. Could we see it over years? Sure, anything's possible. But his story is it's going to happen. One of his biggest calls is 30% crash this summer. That is so impossible as to not even be funny, right? The largest crash we ever had over 52 years was 8.9% for the country. So to have 30% in 3 months, come on. We could have World War III, and it might not be that bad, right? So again, I'm jealous. Freely admit it. His ability to tell stories, get clicks, get paid, awesome. I'm not playing that game, but he is very good at it. You must respect that. Second, I will absolutely apologize if I'm ever wrong on something when I call someone out. But he's calling for value crash and I'm calling for transaction crash. I think I will be right again and he will be wrong again. But yeah, if he happened to be right, I'd let him know. I think the more and more I think about it, the more and more I respect the game. Why should he give it up? It's clearly working. He puts out 3 crash videos a week and he gets 100,000 views. He's probably making 30 grand a month, making crash videos. So why should he change? I don't think he should change. Keep telling your story as long as it works.
Well, interesting take. However, I would say one of the reasons why so many people tune into these internet shows like you have and like some of the other ones that are out there is because people are tired of what's now been branded legacy media being so quick to put titles out like a crash is coming or Bitcoin is dumb or Bitcoin's too good. They put out whatever the catchy title is and they don't care if they're right or wrong. So I think potentially it'll come to bite them in the butt. You look at that page that you put up there and it almost looks like the same thumbnail 40 times. Why? The same little picture. Why? Well, that gets clicks. Who cares if you're right? Yeah. Just get people to watch the videos.
Yeah. They
all look the same.
It's yellow and red. Yellow and red clearly. It's got the easy button a couple of times. Has 30%, 40. It's like scary numbers. Yeah. I mean, dude, again, I got to respect the game. The guy's playing a game and he is clearly getting paid. So I'm jealous. I'm a hater, whatever you want to call it. He is crushing it. He is winning today. We're just playing different games.
Okay. All right. Well, let's move on to the next question. So another wonderful hater, Jorge Orpinal Perez, YouTube user, says, wait, like a week ago, Mike, you said the market is going to shock people with even higher prices. And now you're literally saying the market is going to crash. Wow. Flip, flop, flipper on site. I think this person misunderstood what type of crash you were referring to. What are your thoughts?
Yeah, so I think he posted that on a video with Inland Empire. So may possibly. So again, I want to be very clear. I think we are going to see the largest crash in transactions peak to trough that we've ever seen, which means that means about 50%. I think that's coming. I think we're already in full flight. We should see double-digit drops in transactions as soon as July or August. It's going to be horrible. It's going to be bad. And it could dent GDP, which again is something I'm calling for, right? I'm playing a game where you see a series of dominoes. I'm not only looking at the next step, I'm trying to look around the corner because that's where you make the real money. If you can look around the corner and see what's coming, it could be awesome. Why did I do that? What did I tell you 6 or 9 months ago? Raise money when it was cheap and easy to get. I did it. I told people to do it. Some people followed, some didn't. That was looking around the corner. Now, look, you can't raise as much money in a burr. You can't do cash out refis. I was right. Again, what this individual probably is talking about is my call for this nasty crash in transaction, which a lot of people don't think is important. It is absolutely important. A lot of people are like, stop talking about crash in transaction. Everybody wants to know about price. Well, you guys don't understand how the economy works. Real estate or housing makes up 15% of our GDP. If half the transactions go away, that's 3-4 points. That puts us into a recession, and it could be a nasty recession. So it absolutely does matter. And again, it means the people that do the work like us, we can find motivated sellers. It probably won't be as easy as 2010, but this year, next year could be the second easiest year to find motivated sellers. Now, the other thing you could be talking about, I do think there are some markets that will crash in value. Certainly correct, right? And I do have a delineation. A crash is 20%. Anything less than 20 is a correction, just to clean up vocabulary. So for example, I put out a video with Brian Lebo 3, 4, 5 days ago that Vegas is going to crash 50% in transactions, and we may see price deterioration next year. I think the video this guy was talking about was with Omar, right? Omar is my real estate entrepreneur in the high desert. The high desert is the first market to move in California. First up, first down. And I think that market will see some price deterioration, right? So again, if you're going to call me out on 2 different calls, let's at least understand them. Boise is a bubble, and I've said it for 6 or 9 months. It could pop. It could see double-digit price declines. But just because Boise pops doesn't mean we have a national housing crash. I do not think the median national home price will fall at all in 2022. In fact, I think it surprises to the upside. So, yeah, this person probably is reacting to a thumbnail or a title. But again, I think there will be some buy boxes, like your buy box might fall. I don't know your buy box. I don't look at it. I don't think mine will. Yours might. But that doesn't mean the nation will crash. I don't think it'll happen.
Yeah, I think that it's just too early to tell. Things move too slowly. I think, unfortunately, if people don't want to actually do the time to listen to the whole video and do the research to understand how the crash in housing transactions could lead to a recession, which potentially, if the recession gets ugly enough and it impacts other industries and causes people to be laid off, maybe down the line, you see some reduction in prices. But you can't really make that assumption or forecast that this early. It's just reckless.
That's why I am not yet calling 2023. I don't know if 2023 will be up and down there. I can look around the corner, but I can't look around the corner and down the block, right? I mean, that's just too far, right? I don't know, right? The Fed could do this, Ukraine could do that. I mean, there's just all these other variables, but I can tell you right now, national median home price will not see a negative number in 2022.
Okay, on to the next topic. Some people had some questions about interest rates rising. So from the YouTube user whose name is me, she goes,
good name.
Yeah, they go, I enjoyed this presentation, but I'm curious of your thoughts on the 10 or even 20-year US Treasury bond reaching 5% by this December. Do the Fed interest rate hikes also raise the Treasury bond yields? I have a few rentals paid off that net 10%, but I'm thinking if Treasury bonds hit 5%, I would be okay with half of the return. What do you think about that?
So there's a lot in there. So I think there's a couple of things we should talk about. So first off, the Treasuries, the 30-year or 20-year hitting 5%. I don't know what the 20-year is. I haven't looked. It's probably close to the 30, but we're in the threes, probably the high threes today. So could they get to 5% by the end of the year? Yeah, I mean, I think the Fed funds rate could be 3 to 3.5, which would mean the 20-year. Yeah, it's possible. High fours, 5%, absolutely. Again, I haven't looked at the 20, so I don't know where the 20 is. But yeah, certainly the 30-year Treasury could get to 5% this year, certainly next year. Then the second question is basically, hey, if my free and clear properties only produce 10, should I go get a Treasury at 5? The risk return, very different. I mean, I think that really is where you are in life, right? If you're, I don't know who me is, but if you're 65, 67 years old and you're just tired and it's being a landlord's not riskless.
Right.
So, I mean, if the answer is, hey, you could sell them or do whatnot and then put the money in treasuries for 30 years and you're only going to live 22 more years, then yeah, I mean, that's the beauty of real estate. You have those options, right? And especially if you have residential, they're easy to get out of. So I wouldn't mind that. And I actually think what's really happening with interest rates is more and more companies, including Wall Street. What people don't realize is Wall Street was buying single family homes at a 6% risk adjusted return. Why did they do that? Well, they could borrow at 1, and if they earn 6, that's a 6x. Easy money, printing money. Well, guess what? If Wall Street has to borrow at 5 and they get a 6% adjusted return, that's not very good. They won't do that. They'll go do something else. So interest rates matter. And I think there's a lot of things will go into bonds if they get to 5%. So, yeah.
Yeah. So to your answer, and this person's comment was actually kind of long, I kind of abridged it, but they did mention that they were 57 years old and that they would rather live modestly on a 5% return than deal with the stress of rental ownership at 10%.
There you go.
My follow-up for you is, with inflation rates so high, if you're living on a 5% return on your bonds, but inflation's at 8%, so just losing money, isn't that not the smart thing to do?
Well, again, it depends on how long you think we'll have 8%, right? And that's why I borrowed a bunch of money at 4%, even though because again, I knew that I could be suffering 8% hit to my cash. That won't last. I don't think it lasts years. My hope is we're under 8%, certainly by the end of this year, right? I still think we're at 6, but I think we're on the trend down. At least that is my hope. So I think you absorb a loss for a year or so. I think if this individual is 57 and they set up for 20 or 30 years, I think most of those years inflation is below 5%.
Okay. YouTube user Zuriel Murata is a pretty simple one. If the mortgage rates are rising, how would an investor see this in terms of their cash flow? Is the silver lining going to be rising rents?
Actually, I don't. So Read it one more time. I got lost because my brain went two ways.
If the mortgage rates are rising, how would an investor see this in terms of their cash flow?
Yeah, so that's part one. Thank you. Well, the short answer is if all else being equal, the obvious answer is cash flow goes down. But if you follow my strategy and what I tell you to do, you should be excited because rising interest rates actually hurt homeowners the most. And one rental at a time is built on residential properties, houses, duplexes, quads. And our largest competitor are homeowners, owner rocks. And what is happening there, because their properties don't produce income, a lot of them are just frozen out. CNBC reported the other day that we've lost 18 million home buyers because rates went from 3 to 6. Demand is going to fall, which means as an investor, I can create better deals because all I worry about is yield. I really don't care about price. I certainly don't care about interest rates. I would gladly, if the market went to 10% interest, 30-year money, that would be awesome for investors. It would suck for homeowners, no question. But again, for an investor, it'd be awesome because then again, I could do more seller financing or get lower prices on things with equity. So I don't really think about interest rate because it's just one variable. The answer is put it in your spreadsheet. A great deal is always a great deal, even if the cost of the capital is up. One rental at a time doesn't change because of a rise in interest rate. It does reduce competition, which is the silver lining for me. But yeah, I don't mind a higher rate, frankly.
This kind of ties into another question another user had, Sean Academia, and they asked, how does someone who's priced out of buying increase rental demand? Wouldn't they already be a renter?
Yeah, so actually, let me go back to the other one because remember my brain went two ways. I think the second part of that question was, will rents rise? I actually think we've already seen rent rise. I believe we've seen artificial rise in rents the last 2 years. So I'm actually planning in my portfolio flat rents for 5 years. So again, don't buy on appreciation. Don't buy on assumptions. I think a lot of LPs are going to get smoked when syndications blow up because of bad assumptions. I would not assume any rent growth. If you got rent growth, great. But don't build that in your spreadsheet. Don't do a great deal that assumes 8% rent growth. Assume 0 and then be surprised. So that was how my brain split on the first question. Now the new one, I'm sorry.
Sean Academia said, how does someone who's priced out of buying increase rental demand? Aren't they already a renter?
Well, you're assuming a lot there, right? And that's, I mean, you don't know the situation, right? So really what we're talking about here is first-time home buyers. And where are first-time home buyers coming from? Well, they could be coming from mom and dad's house. They could be coming from a roommate situation. They could be moving across the country. So, I mean, there's a lot of churn. And if the housing is unaffordable and you can't buy, most people would want to live in a home. Maybe you're leaving an apartment and going to a home. Maybe you're leaving a studio apartment, going to a 3-bedroom home with a roommate. Without question, homes are in higher demand today because of what we've gone through. You want more space. You want to store your junk. You want to do your office, your gym, your backyard. There are lots. Rental demand will go up because affordability is down. It's just common sense.
I'm going to jump in on this one. So what you can never do, no matter what happens in the economy, the market, or politics, you can never stop that slow march of time. Everybody gets older. So when do people first buy their home? Usually around 30, 31, 32 is when people are first buying a house. And when do people move out of mom and dad's house? 18 to 21. Well, if all of these newly 30, 31, 32-year-olds cannot move into houses, they're staying in the rental market. But there's always new 18 to 21-year-olds getting older every year. And so that increases the supply of people trying to buy the same amount of rentals. And so that's where, if these people don't move on to housing and they're stuck in the rental market, that's what's increasing the demand.
Exactly.
Okay, real estate market moving slow versus fast. One of your favorite topics to talk about. You already touched on it briefly earlier. Sergio Antonio Zapata, who's a big fan of yours. Hello, Mr. Zuber. Excellent analysis. Again, I disagree with the analysis regarding real estate moving slower. Real estate has always moved slow, but it has never moved faster. With the age of information here, 24-hour news cycles, and very accessible information, the market will move faster than anyone anticipates. And then he goes on to say, another pointer is rates. Nobody, apparently not even you, nobody anticipated their recent growth Some swore they couldn't go up that fast, and look what happened. But again, at the end, he does end it with saying great content.
So a couple of things. Yeah. So certainly did not, again, love to admit when I'm wrong, to the earlier question. One of the things I admitted, I don't know, 2 or 3 months ago, my call on rates for the year was right, but way off on timing, right? I thought we would get here in December. We got here in June. So again, I'll admit when I'm wrong, I was absolutely wrong on that. I didn't think we'd be here this year, or at least not till December. So clearly I was wrong. He's right. I don't know anybody that called a once in a lifetime, because rates have never done this. In the 52 years I've studied this, rates have not moved this fast in 100 days. So shout out. Yeah, you're right. I missed it. I was wrong. I don't know if anybody, if anybody did call it, let me know. I'll give them a heads up. So there. Now for real estate, I agree that the news cycle is fast. I do believe Bigger Pockets YouTube University. But unfortunately, I don't think that changes financial decisions all that much, right? Buying a home is still buying a home. It's still a 45, 60-day cycle. You still have to go out and see it. This is not suddenly as easy as NFTs or crypto or trading cards or anything. I, in fact, think the news cycle slows real estate down. So his point about the news cycle accelerating, I actually think it's the reverse. I think the influx of negative information slows it down. The media is not balanced, right? So if you're in a situation in life, you're a 31-year-old and you're excited for your first time home and you would normally be buying it now, and then you get inundated with on the TV, your computer, your phone, that it's a bad market, you probably slow down. So I completely disagree. I think the news cycle will slow real estate down, not accelerate it. So again, I could be absolutely wrong. It happens. But I think the news cycle slows real estate down more. It doesn't speed it up.
Now, I agree. And one of the reasons is, I watch a lot of YouTube videos. Yours, I make them myself. I watch other channels. And it doesn't matter what year it is, doesn't matter what time of the year it is, doesn't matter if the market's up, down, sideways, middle of a pandemic, or in the middle of the bull. Everybody is always writing in the comments, well, I don't know, man, the news looks pretty bad. Probably I should wait to buy. So I think you're probably right. News media tends to slow things down because all they do is pump out negative or sensationalized headlines. And everybody goes, you know what? I think I'm just going to stand on the sidelines and wait. Then they miss a lot of opportunities.
Agreed.
Okay. Now this is a good topic right here. Seller financing. You've been talking a lot about seller financing, and people have some questions, and I thought they were really good. So Peter Bedford says the market is going into tortoise mode. What do you think is the best pitch to a seller to carry back? Or several approaches that might appeal to sellers with large equity positions? Your response, in classic you fashion, was 4 words: your price, my terms. Could you elaborate on that a little bit?
Yeah. So one of the things we did is we did a deep dive 90-minute session. You can find it in my playlist called Deep Dive now. But the whole idea is basically this: we're going into a market that's slowing down, and you're going to have to build a relationship with the seller. And basically, it's exactly that. I use an example that the seller wants $1 million. I'm willing to pay him 800 cash. He doesn't like that, or she doesn't like that. Then I say something like, you know what? I could pay $1 million if we did this and that, and seller financing be a part of it. Because again, for me, Mr. Seller, price really doesn't matter. What matters to me is cash flow. I am one rental at a time. I am buy and hold forever. So if you want me to pay $1 million, I need terms where I can hold the property forever, because I know over time that my 800 will grow to $1 million. So what I will do, Mr. and Mrs. Seller, is I will give you $100,000 today. I'm going to ask you to carry $900,000 for 10 years interest only at 2%. What is that going to do for you? Well, it's going to give you your price. You're going to get a little walk around money today. I'm going to be able to hold the property forever. And oh, by the way, you're going to significantly reduce your taxes. You are going to remove your daily, weekly, and monthly headaches. And oh, by the way, you have a secured position that will give you income for the next 30 years or 10 years or whatever I just said into your retirement. Let's talk about it. Because again, I have to hold forever. I don't care about price. I care about cash flow. Let's go. Something like that.
Okay. So that leads me to the next question, which is asked by Kyle Horn. But how do you market to people with 60% or more equity, these potential sellers who could do seller financing? How would you generate that kind of list?
Again, this is the beauty of applications that were not around when I started. So I have a relationship with PropStream. They gave me a trial because I had them on my channel a bunch. So I use PropStream. Because they were on my channel, they gave me a link that gives me free access, and I do postcards, right? Actual postcards. I create fear, right? Housing crash coming, right? So I sell to that, and then I basically say, hey, lock in your profits, maintain income, lower your taxes, less headaches. Call me. Let's discuss. So the answer is I reach out. I market to owners and see if they want to talk. I go direct.
Yep, makes sense. Seller financing is fantastic. You had encouraged me after I bought my second rental property to explore seller financing. I now have 2 seller finance deals, and I wish every deal was seller financing because it's wonderful. So do your best to make that happen. Okay, we're coming up on the last couple questions here. Your thoughts on negative headlines. For every negative headline, you've been saying there goes 2% of my competition. The user Shikagaru 007 says, obviously newbies into the market might not be a legit competitor to you guys. I think she was saying about you and Matt, due to your experiences and current holdings in the market. But for every 2% or however many that goes out, how many do you think will try to enter the market?
Well, that's an interesting flip-flop of the question. That's a great question.
Who else like you sees it as an opportunity? And does that balance out the 2%?
Oh, so when you look at a pie, right? Let's just assume the pie is 100. About let's just call it 67% of that pie is owner occ, 33% investors, roughly speaking. My 2% comment is usually about owner occs, right? Because again, it doesn't produce income, all of that. So I don't know. For every 2% we lose of owner occs, we might gain. We won't gain much because again, new investors, they're more like owner occs because unless you've done this and you've seen cash flow and understand calculations, it takes work. We'll certainly see some increase, but it'll be very marginal. I don't know.
So, ultimately, I think if you're seeing those negative headlines, 2% are moving out. Some people might move in, but it's definitely not going to be more people moving into investing than are moving out as competition.
Not because of the negative headlines, but I will flip that just thinking about this in real time. What might happen, again, this happened to me 20 some odd years ago. If the stock market continues its downward pressure and goes 50%, like the Dow and S&P, which are all around 20% today, if they ended up going down 50%, we'll see more investors come to real estate. That will happen. Right. When stocks are, I don't understand. It's a casino, all the things that I said decades ago, that will cause more investors to come. Absolutely. But we're not there yet.
Okay. Two more questions. If you were president for a day, it could fix the market. All right. Again, this is from the YouTube user, me. Mike, a little off topic, but what real changes could or should be made to correct housing, which allows for more people entry into housing, but still fosters an investor market? If you were president for a day, you could just wave a wand and make some changes. What do you think would help?
Well, first off, let's be clear. That's a job I would never want. Talk about a job that there's no winning. So I would never want that job. But
I did hear your favorite politicians running for that job, though.
Oh my God.
I think you said that in your financial news this morning.
King Newsom. Yeah, that's so sad. So sad. Anyways, you're trying to distract me. What I would probably do is we base it, in my opinion, again, king for a day. We need to encourage a new way to think of building homes. Right. Today, building with sticks and bricks and all of that and all the regulation across the country, it's just too expensive. There are cheaper ways to build homes. 3D home as an example. We need to cut the cost of building first-time homes significantly. So if we could find a way to build, 900, 1,100 square foot homes profitably in far greater numbers and greater speed, we need first-time home buyers. Right now, given regulations and costs and all of these things, you have to build luxury. You have to build expensive. So I would do everything I could to increase investment in technology or standards or whatever that is. And I would build smaller footprint, cheaper, but profitable homes. It has to be profitable. It can't be government subsidized. but that's kind of where my mind would go is how the hell do I build a 900, 1100, 1400 square foot home cheaper, profitably, safely, all of those things,
Right.
and faster. I mean, that's where I would send all of my energy.
One follow-up. Recently, Canada made it illegal, or they changed their policy on allowing out-of-country investors, Chinese and things like that, to come in and buy up their markets.
Yep.
Do you think that that is something that maybe we should lean towards? Should we make it more difficult or illegal for out-of-country people to come in and outcompete the American homeowner or home buyer?
I mean, off the cup, if you ask me, I'm a free market person. That kind of goes against that.
Right.
Pretty heavily. Yeah. So I haven't thought about it a lot, but a gut reaction is, and anytime the government gets involved and picks winners and losers, other things break, and something would break. I'm a free market guy, and I hate when the government gets involved. There's nothing like a short-term government thing. It's just, I don't like government getting involved in anything if I can avoid it.
Fair enough. Okay, we're going to end it on a good note. One last question from T Blaze. He asks, Mike, is Jesus getting ready to return? So are we at the end of times, or should we be thinking to ourselves, this too shall pass?
Well, I certainly think I would certainly act like this time shall pass, because if it doesn't, does anything matter? Right? If the world ends tomorrow or the next day, does it really matter what's going on? Being prepared is no big deal. So I certainly hope not. Yeah, that's funny. I actually don't remember that question.
You responded with an LOL.
Oh, my classic. I have no idea what to say.
Yeah. We don't get into religious topics on this channel. But,
exactly. That was funny though. Yeah, you definitely scoured my channel. So do me a favor. Where can people find you?
If you want to follow me, you can just go on YouTube or Instagram and type in Millennial Mike. I mostly talk about out-of-state investing, how to get started as a West Coast, East Coast investor, investing in the Midwest. That's what we talk about on my channel.
Awesome. And you did a deep dive in my Facebook group yesterday, which was a lot of fun, I heard. So thank you very much for doing that.